Good afternoon and welcome to Full Transparency Trading. As you see, I'm over here in TradingView looking at my fib to see if there's another place for me to enter a trade. I'm not seeing anything right now, so we'll go ahead and review our trade from earlier today. Let's minimize this page and head over to TD Ameritrade's Thinkorswim, or I suppose Charles Schwab's Thinkorswim. Let's go ahead and clear these drawing sets so that we can start fresh. You go to clear drawing set, click yes, takes everything off of the screen. Now, first we'll go over to SPY because SPY was a major indicator in this trade here. SPY did majority of its moving in the pre-market, all right? So in the pre-market, SPY opened green, so I kind of knew that SPY was going to fire off first thing in the morning and then go down. So I just had to draw my levels out, and as you see, I have my level selected here at 485.06. We get up to 485.22, but as I told you guys, those wicks are just spikes in price action, not the actual price. These things line up perfectly at 485.02. If I was to slide it to the left, you'll see where that's heading. And that is the highest point at the end of the day on Friday, is exactly where we came down to. So go ahead and slide back to the right. How I knew this was going to happen is if I zoom out here, click, 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 you're going to see a gap up right here. You see this little area here? This is a gap up. We jumped off of this spot, spiked up here, and then we started riding higher at about, what is that, 10 o'clock at night on Sunday. We jumped up from 482.63 all the way to 483.41. And when that happens, you get a volume imbalance. You know, too much volume all in that trade all at once shoots it up. Then it started to just slowly run up to the day, stopped here, and we now knew what the high was. So you're looking at that high and you're like, okay, cool, it's going to come down through there. And I actually get into this trade fairly early, so we'll head over to QQQ. And I'll do the exact same thing over there. Now on QQQ, it's much more pronounced because this was a tech stock that jumped up like this that created this gap. So you see a much more pronounced gap here on QQQ. You see the bounce up from all the way at 421.9. But in reality, where we're trying to get to is this right here. There's 421 right on the body. Put it at what? 421.29, right? You're like, okay, cool. So now we get up here into this area, and I'm like, this is the real area that we're going to be trading in. So I go ahead and put a price line there. And as you can see, we spiked up into this area here, came back down, spiked up into that area again, and then came right back down to there to where it started. We're going to go ahead and go to the 1 minute candle because I get into this very quickly. I wasted no time on this trade. As soon as I saw a spike up through there, I was patient. I was patient to watch it ride all the way up. And let's go ahead and put a new line here as the new high. So this would be your top resistance area or your supply zone if you're drawing zones. We bounced up there. If I was super confident and it wasn't Monday, like let's say this was Tuesday, I would have gotten to the trade right here because I had some history showing me what was going on with that and that we were going to push down. But because I wasn't as confident, I was very conservative today, which is why I only made $134. So we scroll on down, it comes through there, I wait for the retest, and what the retest is it's going to pull back a little bit, but then it's going to continue to push down. So we pulled back a little bit, didn't go. If we'd have taken over this whole candle, we would have known that it was going to continue to shoot up. But since we didn't take over that whole candle, we started pushing back down. We know that the downtrend is coming, and we're just waiting for us to slip below the 90 EMA before we get in. Get below the 90 EMA, we get in, we spike up a little bit, but it never even makes it to the top of this candle. Pushes down, shows us that that's going to be a continuation, and then 1, 2, 3, 4 minutes, and then right here at the bottom of this, we're actually at $300, right? How did I get $134? Well, while thinking that it was going to continue to push down, I completely this reversal pattern right here. It starts reverse, it comes back down. It's actually sitting at about $240. I was like, okay, it's going to continue falling then, and I didn't get out. It spikes up really hard over that minute. So now I'm looking at about $208, and then we get here and it's like $155, and it spiked up again as I was closing out, and that got me $134. And let me tell you guys, I don't care. And I'll tell you why I don't care. Because it's not about nailing these massive trades all the time. It's about consistently being green, having consistently positive days, because all of this will compound. I'm going to get those days. I swear, I promise you guys, I'm going to get those days where I hit that $1,000 trade, where I hit those consistent $500 and $250 trades as well. But for right now, I just want to keep building the account, chugging along like a train, chug upon my account to make it larger so that I can actually leverage more which is going to get me naturally higher and higher trades as time goes on. So just take your time, build your account. I don't care if you got 50 cents off of this, $34 off of this, or $134 like I did, or even if you got $1,000 or $500 off of this. Just keep slowly building that account up, because you got 251 days, and the more of those days that you're positive and the higher you can get with the positive and the more you can minimize your losses, you're going to be sitting pretty at the end of the year, guys. Let's continue to grow together and learn together every single day. Thank you guys so much for checking out this video. I'll go ahead and do more of an analysis. Let's go ahead and slide to the end of the day to see where we're at right now. Oh, and I love it when I see my plan come together. So we come down below the 200 EMA. I knew we were going to have a hard time getting back above that. And then boom, we continue the spike. Now, you know me, I'm not going to sit and hold my trade for an hour and a half. It did come all the way down to where I said it was going to come down to, but I was not going to sit there and hold that trade all freaking day. So now we're below the 200 EMA. We're kind of just jumping off of that bottom there that we've set. So now we have a zone for the day. We've got 421.30 up to 423 pretty much for the entire day. Go ahead and put a line right there. So that's a key resistance level right there. On that, this is a key support level right here. On this. And then boom, for tomorrow, we now have our support and resistance. And we need to break out of one of these zones to have a continuation. I could have got into a couple more trades, but no, I'm done for the day. You got to just close your computer and move on, and then try again tomorrow. Don't trade for the sake of trading, especially when the price action in the afternoon gets a lot lower than it was when I got in. Even for someone like me who's a 0-day trader, it's just not worth, it's not even close to worth what it was when I got into my trade. It's down to 32 cents now, so it wouldn't be worth it overall. As you can see, we actually made 147 correction. It was down to 150. I made 147, but I had a negative $12 swing trade, and I went ahead and closed out of that swing trade, which brings me to $134 on the day. But good trading day overall. Very happy with the little successes that I'm having. It's all about building your confidence and building your account. You need to build that confidence up through winning trades and minimizing your losses, and then you're going to build that account up the exact same way. Hey, thanks again for stopping by and checking out this video. You guys have a great day. I'm your host, Sebastian, and I'm out. Thanks for checking in.